This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. We're starting a fresh new week here on Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Full 5-day working week. And then, the Monday after, you get a bit of a reprieve. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, morning. I'm getting good feeling about this week because we have some good numbers that the market will react to. ICICI Bank, top notch. Reliance Industries as well, better than expectations. So could this be the week when the market moves out of its range, right? Or out of its slumber? That's the question.
And it has been a slumber, right? For the last 3 or 4 days, it's been absolutely in a very, very tight range. Global cues, I'll just wrap up in one sentence. Not very much. Absolutely not very much. So it's lackluster. They don't provide any sort of guidance in terms of what comes next. So that's it. That's all that you need to know. Looking ahead, there are some earnings, big global earnings from the likes of Microsoft, Google, Amazon, Caterpillar, GE. So it's actually a massive week of earnings in the US markets as well. Let's come straight to what will be the mover here for today. What will be the decider? We had strong fourth quarter numbers from both Reliance Industries and ICICI Bank. And we'll discuss this in greater detail. But both numbers were a beat. Stocks, I've always said, move based on how much of earnings being upgraded by. In the case of Reliance Industries, while the outlook is pretty positive, there's not been very much of that. ICICI Bank, of course, has hit it out of the park, which means even though there are concerns that, in the case of ICICI Bank, deposit growth still lags HDFC Bank, etc., numbers have seen sort of marginal to meaningful upgrades across the spectrum. We'll come to that a little later. The total weight of ICICI and Reliance in aggregate is 18% of the Nifty. So we're talking about a large chunk which is, beaten expectations, and that essentially could be the driver today. All right, for the Nifty to come to levels, last Monday's range still remains very, very relevant, both the high and the low. Through the course of last week, the Nifty remained within that range, last Monday's range. On the lower end, 17,574 is that level, which the Nifty once again, by the way, held on to. It did not break that level. But we did see a negative weekly close. It was about 250 odd points worth, but it was a negative Friday. On Friday, it was a negative weekly close, which does kind of bring into focus, potentially, perhaps the market starting to move a little lower. On the downside, and this is a level which we've sort of highlighted before as well, 17,501 and 17,388 become the levels to watch out for on a break lower. We closed at 17,624. The SGX is indicating a higher start, so it's not going to come into play immediately. But if it starts to play out, 17,501 is the first level to watch out for. For upsides to be retained, the index needs to see a strong close above 17,863. This is nothing but Monday's high. Last month, 17th of April's high, which you need to see a strong close above. By the way, there is a bit of a divergence developing between the Nifty and the Bank Nifty as well. The Bank Nifty is still stronger. The Bank Nifty also saw a negative weekly close, but it was a very minor one. On Friday, the Bank Nifty was down some 14, 15 points or so. So can't really say anything conclusively. It's been the stronger of the two indices in any case. And of course, with ICICI Bank numbers behind it, perhaps it could act as a tailwind for the overall market. In terms of levels for the Bank Nifty, 42,603 is the level that the market needs to take out on the way up. That's 42,603. And Monday's low, which was 41,799, is the important level to defend if there is, at some point there is some selling which starts to emerge. But, those are levels, etc. A lot of it will depend on how those two big heavyweights, Reliance and ICICI Bank, behave today. And it's going to be about earnings in a very large measure. Sonia.
Oh, absolutely. And, the SGX Nifty is indicating that the start will be well in the green, right? Yeah. So I think the street likes the fact that both Reliance and ICICI Bank have delivered a good set of numbers. ICICI Bank was top-notch. There were no complaints at all over there. And remember, ICICI Bank has actually done nothing this year. Of course, the Nifty is down this year, down about 2%, while ICICI Bank is flat. So in that context, the stock has outperformed the Nifty, but it's done nothing for investors this year. So could this be the moment when, it starts to sort of perform? Net interest margins at an all-time high, highest ever quarterly profits, so no complaints there. On Reliance as well, it was a beat pretty much on all parameters. A very strong oil to chemicals business And the good part is, despite having a very high capex plan, their net debt was actually flat quarter on quarter. So that's something that the street liked. A lot of brokerages have gone ahead and raised estimates marginally on Reliance Industries. So these are two companies that could keep the markets alive. Wipro as well has they will be considering a buyback on Thursday. That's something that the street always likes. So Wipro too could perhaps be in the green. But a couple of things that I'm watching out for. One is there was large selling by FIs on Friday. So, does that keep a lid on the market's gains? Over 2,100 crores of selling is what we saw in a single trading session, while DI has bought about 1,600 crores. And this is a big week of earnings for the Indian market. So today we begin with IndusInd Bank. There are a lot of auto earnings coming out. There's Bajaj Auto, Maruti Suzuki. Through the course of the week, you have Axis, Kotak Mahindra Bank, HUL, Tech Mahindra. So it could be the deciding factor for the market. For now, just these two earnings, Reliance and ICICI Bank, do they move the market out of its range? Maybe not. The street will definitely give a thumbs up to these numbers, but it's been a very tight range for the market, and FIs continue to sell. Global cues were not that great on Friday either. So maybe we could continue to maintain the range, but within that, some of these pockets could do well.
Well, that's right. Sonia, the FI selling has been intensifying. So what started off like a few hundred crores has moved to around 2,000 crores odd. So hopefully, given that we have some positive news flow on large weights on the index, hopefully that cools down a little bit today. But a fresh breakout will come on the Nifty only once we get past at 17,850. On the top weights that I was talking about, there are 4 stocks that will be getting, that will be reacting to positive news flow. You got the HDFC twins in there, Reliance Industries as well as ICICI Bank. ICICI Bank, the positive was their numbers, blowout numbers out there, looks quite good. Reliance Industries, well, for the first time they mentioned that the net debt to EBITDA, the target is to keep it below 1, and the street likes that, despite the big investments they're looking at. And also, I was reading a note coming from Jefferies. They're saying that there's a positive read-through even for Bharti Airtel, because the ARPUs were more or less flattish. For HDFC twins, well, the RBI dispensations, well, they are paving a way for a smooth merger. So those 4 stocks will be reacting to positive news. At least you don't expect them to be sharply in the red. What do the FIs do? Well, they added close to around 5,000 long contracts or thereabouts, just close to around 2 longs for every 1 short positioning. The short positioning has come down to around 61%. Remember, when we started the series, it was more than 90%. So fair bit of that short covering has taken place. On the index option side, well, they seem to be hedging themselves because, yes, they're going long on, the index futures. But what's telling you there'll be a bit of a lid on the markets is the way they're writing calls. Even in Friday's trading session, they wrote close to around 2 calls for every 1 put. And what were they writing? The 17,700 call. The open interest there is more than a crore odd. And there was aggressive writing being seen out there. On the downside, 17,600 put as well. There was some writing. And the premium on both these 2 strikes is identical at around 55 rupees, which brings us to the near-term range. Since the 17,600 put is getting written, support comes in at around 17,550. However, there's a very, very stiff resistance in that vicinity of around 17,775 to around 17,800. This is the near-term range. So that's the positioning. But the trigger today is going to be the Nifty Bank. You have 2 large weights in there that are reacting to positive news flow, HDFC Bank and ICICI Bank. Well, you need to get it past that 42,600 odd mark. And last week, we attempted that. Twice in the past 5 days, we went to those levels, but that did see selling. So the key today will be the Nifty Bank opens in the green, but can it hold on to that green is going to be crucial. If that can happen, then you'll gradually see that move towards that 17,775 or 17,800 odd. So let's see how it goes. SGX will be suggesting a green start to the tune of around 40 to around 50 points if you compare it with the Nifty future. So interesting times.
Nigel, so individuals make up the whole. So Reliance, ICICI,
35% of,
so that's going to be important.
By the way, 20% of the Nifty components report this week. So this week is also a really heavy week for us and lots of big numbers to track.
Absolutely. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Ed Yardini of Yardini Research will join in to discuss the global trade setup. Our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At about 8:30, we do a fundamental stock analysis with Prakash Diwan. That's the lineup.
All right, so we have a lot of views coming through. And first up on the show, we have a comment from Gautam Dugar of Motilal Oswal Financial Services. He expects the markets to remain range-bound and trade with a positive bias. He says ICICI Bank results were picture perfect and it remains their #1 preference in the banking space. He says Reliance was slightly better than their expectations due to the lower tax rate. He also says the stock has corrected, hence Reliance offers a decent risk-reward ratio. Gautam adds that this is a week of heavy results and amongst the lot, they like Axis Bank ahead of the numbers And they will also watch Maruti very closely to get some auto sector trends.
Well, let's get you some money market views on the rupee. B Prasanna of ICICI Bank says dollar remained under pressure as early signs of labour market weakening emerged. Asian currencies were broadly range-bound and will take cues from this week's Bank of Japan policy decision. Last week, rupee traded in a narrow range, around 82 to a dollar, where RBI was seen accumulating reserves against the dollar inflows. Prasanna has a positive outlook for the rupee in the midterm and expects USD INR to trade between 81.6 to 82.4 to a dollar this week with an appreciation bias.
And on the bonds, B. Prasanna says that global yields softened despite a hawkish reiteration from the Fed members as incoming data continue to point towards slowing down of economic activity. Domestic yields moved lower as well, taking recent action by the RBI as a pivot instead of a pause. He expects the bond markets to trade with a positive bias and the 10-year benchmark yield to trade within 7.10 to 7.25% range.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Reliance, ICICI Bank, HDFC Twins, as well as HDFC Life, Macrotech developers Wipro and Mapma India. They're back on the back of positive news flow. But on the flip side, Sun Pharma and Yes Bank will be reacting to negative news flow.
Okay, well, let's welcome in Ed Yardini, President at Yardini Research. He's joining in now. Ed, good to have you with us here. You once sort of called FOMC the Federal Open Mouth Committee, although we won't have open mouths this week because the Fed is in the blackout period now, all the way to the meeting in May. What's your sense, though? I mean, the market is fully priced back that 25 basis point rate hike in. Are we going to go into it like that, or should we expect further changes? What's your sense?
Well, I think that there's a case to be made for the FOMC when they get down together and discuss the latest data, that they might actually conclude that because of the banking crisis, they don't want to exacerbate it. And so they may not raise the Fed funds rate by 25 basis points and may make a very convincing case that because of the banking crisis, the federal funds rate is restrictive enough and doesn't need to be raised anymore. On the other hand, they may just go ahead and do the 25 basis points because they've been talking about 5.25% on the Fed funds rate for some time. And in that event, I think they will still say that they're going to pause. I'd be pretty shocked if they didn't pause in the face of the banking situation. I think the market would take that pretty well. The problem is we now have a deficit debt problem crisis about to occur, and it looks like it's going to come sooner than expected, maybe in early June.
Okay, so you're expecting a pause this time around, and the bigger issue really is a debt crisis that the US is perhaps staring at. So do you think this could be the end of the rate tightening cycle, both globally in the US as well as in emerging markets like India?
I do think that we're at restrictive levels now on short-term rates. I think the bond market agrees with that because we have an inverted yield curve, certainly in the United States. And inverted yield curves are usually an indication that fixed income investors think that it's all right to buy a bond at a yield below, say, a 2-year yield, because if the Fed continues to raise interest rates, we'll get a financial crisis, a credit crunch, and a recession. So we're kind of in that zone right now. And the question is the Fed really going to want to push it over the edge, or are they going to come to the same conclusion that I think a lot of us are coming to, and that is no más, as they say in Spanish. Enough's enough. You've got the restrictive. Now, if you want to keep it there, that would be consistent with what you've been saying.
Morning, Mr. Yardney from here in India. But what about equity markets? We saw a bit of a bounce. I think you have been maintaining that stance that the lows that we saw in October 2022, that will hold out. You think we could revisit that or still hold on to that view?
The October low last year was the low, in my opinion, and I came to that conclusion because I saw that sentiment, the bull-bear sentiment, was as bearish as it was back in March of 2009. And surely things aren't as bad as that. But right now, I think the market's going to continue to trade sideways, maybe north of 4,000. And again, I think on the bullish side will be the notion that the Fed is done for a while. We'll take a pause, even after a 25 basis point increase. But if they increase it, I think they're going to announce a pause. But on the other hand, we've got this debt ceiling crisis, which is coming to a head rather shortly. But I think that'll get resolved as well, but it may take a little bit more drama, and the kind of drama that depresses stocks for a while.
We had a view from Citi last week. Matt King of Citi basically talking about how he thinks, he described it as, he expects pressure to suddenly drop for markets because he thinks, liquidity is still winding down in the backdrop, although we're not talking about it very much.
Right.
The Fed's balance sheet is still shrinking, etc. How much would you agree with that point of view?
Well, not a great deal, because when I look at, for example, the money supply, the M2 measure, it's still about $1 trillion above the pre-pandemic trend line. The same thing goes for demand deposits. There's still a tremendous amount of liquidity left over from the binge that we had as a result of the pandemic. And as we know, there's a lot of liquidity that's sloshing around in the system. Right now, it's looking for better yields from the banks. The banks are being forced to raise their interest rates. Many of them are protected because their loan yields are also going up. But all in all, certainly we don't have the kind of liquidity we had when we had quantitative easing and when the Fed funds rate was zero. But all in all, I think that the resilience of the economy is really quite impressive. And I think there's still plenty of liquidity to keep the economy growing and to allow the stock market to go higher. Not immediately, but I think later this year, I think we'll see the market moving towards 4,600 on the S&P 500.
Okay, on that very optimistic note, we will end this discussion. Ed Yardeni, thanks a lot for joining in. So yes, these are volatile times, but the market could move higher by the end of the year. And perhaps there's a pause coming from the Fed. That's the word on the markets. Let's slip into a quick break. A lot of numbers to track this morning. Apart from ICICI Bank and Reliance, there's also names like Lodha that reported their numbers. You have other companies like Sun Pharma and Focus as well. All of that and more coming up in just a minute.
Welcome back to Bazaar Morning Call. I hope you're having a good morning. Well, as promised, let's get straight to the top stocks that we're tracking for you. Sonia, you go first. Reliance Industries, I think that's the one you're tracking top of the list.
Oh, absolutely. And, I think Reliance will do well this morning for a couple of reasons. One is that the numbers were very strong in Q4. They were better than what the street was estimating. It was an all-round beat. It was the highest ever quarterly profits that the company has reported, led by a very strong oil to chemicals business. The consolidated profits saw over a 20% growth. The EBITDA margins have improved, but the star of the show really was the oil to chemicals business. So if you look at it, the EBITDA in the O2C business was up 17% quarter on quarter, and from being single-digit margins last quarter, it's now moved to almost 13% margins in the oil to chemical business. So the street will like that. Jio also reported a steady performance this time. Despite no tariff hikes, there was a good revenue growth, and the average revenue per user on a year-on-year basis has gone up almost 7%. Most brokerages have, given a thumbs up to the numbers this time. Morgan Stanley says it beat street estimates. The energy vertical is what drove the beat this time. Kotak Institutional Equities has reiterated a buy with a revised target price of 2,800. It remains their preferred pick as well. While Jefferies has upgraded the stock, they say that apart from the oil to chemicals business, retail is growing at a scorching pace and should add an additional 30% compounded EBITDA growth in the retail vertical particularly. Of course, standard disclaimer, Reliance Industries is the owner of the channel that you're watching. It owns Network 18 and TV 18. But I reckon that the numbers will be taken very well by the street. Also, remember, the valuations are now close to, the lower end of what the historic valuations have been. So the risk reward looks favorable according to a lot of brokerages.
Absolutely. Harshvardhan Dole and Balaji Subramaniam will be with us to discuss more about the Reliance fourth quarter results. That's coming up a little later here on the show. So that's Reliance. But the other one is ICICI Bank fourth quarter numbers, and numbers are a clear beat. Net interest margins, especially the highlight. Abhishek is here to wrap this up for us. Abhishek, morning.
Morning, Prashant. So, Sandeep Bakshi has created records in ICICI Bank in Q4 FY23 results. One of the best record is that the net interest margin is at all-time high at 4.9%, with the domestic net interest margin crossing the 5% level for the first time ever. Even the international net interest margin is at 26-quarter high. So, the NII growth of 40.2% YOY is perhaps the best that you are seeing in last 8 years or more, and this has driven the highest quarterly profits for the bank. The highest highest ever return ratios are also seen with ROA of 2.4% and ROE of about 18.9%. Asset quality, they continue to improve. Gross NPA ratio is one of the best that you are seeing in 33 quarters or even more. Unsecured book, now that is continuing to grow. It's at 22-quarter high in terms of percentage of the loans, coming in at 19.4%, and this has driven the net interest margin as well. On the flip side, deposit growth is a bit of on the lower side, given the fact that it's at just 10.9% YOY. And going ahead, as management has indicated, the net interest margin will come down from current levels. But that's not a big worry, given the fact that net interest margin of 4.9% is pretty strong. So in terms of their performance versus our poll, both the NI and PAT is a beat on our poll. Back to you.
All right. Thanks a lot for that, Abhishek. Appreciate it. Let's talk also about HDFC. You're tracking that one as well. There are some RBI relaxations.
Well, for SDFC Bank and SDFC Limited, with respect to their merger, RBI has provided certain clarification for requests made with respect to merger by the entities. So for PSL, that is Priority Sector Lending Target, the adjusted net bank credit calculation considering 1/3 of the loans will be effective on date of merger. So they will get a timeline with respect to, meeting the Priority Sector Lending Target for the first year, that is about 1/3 of the loans, and in next 2 years, they will have to meet the balance or the 2/3 of the loans. So investment, including arms and associates of SDFC Limited, can continue as the same investment of SDFC Bank. So RBI has permitted various stakes, that is SDFC Life and SDFC Ergo, to over 50%. Remember that for SDFC Ergo, it is a very important clarification coming in. And for SDFC Credila, they have to bring down the stake to 10% over the next 2 years. So SDFC Bank will comply with the requirements of CRR, SLR and LCR without exemption. So this can hit the net interest margin or in the near term, but it will get panned out over the next few quarters. One-time mapping of SDFC Limited's borrowers must be done by SDFC Bank for benchmark and spreads. This augurs well for the interest rate, and SDFC Retail, MSME and other floating rates will be linked to benchmark within 6 months. This is also on positive side. Back to you.
All right, thanks a lot for that, Abhishek. Well, one of the stocks that could be reacting to negative news flow is Sun Pharma. Ekta joins us to fill us in on that one. Ekta, morning.
Thanks for that. Well, yes, the news with regards to Sun Pharma is negative this morning. They have received a letter from the US drug regulator for their Mohali facility, which is in Punjab. The letter is titled to be a consent decree correspondence or a non-compliance letter. This is with regards to the company's inspection of the Mohali facility, which was undertaken by the US drug regulator in August of last year. And at that point in time, the US drug regulator had classified the facility as official action indicated, or OAI, giving you an indication that, the facility is possibly online for corrective action from the US drug regulator. Now, the company has said they have to take certain corrective actions before releasing final products into the US. That includes retaining an independent expert to conduct batch certification. The company says they expect a temporary pause in release of batches from Mohali. Now, multiple brokerages have written on this. For example, Incred, they expect a low mid-single digit impact on numbers for a 3 to 6 month time period. Now, the impact, according to me, could possibly be limited also for Sun Pharma. I'll come to that in just a bit. But this is the second plant which is under the scanner for Sun Pharma. The first one is the Halol plant, which has an import alert. Mohali, remember, has always had an issue all the way since Ranbaxy times. But nonetheless, the market could be very incrementally bullish on the specialty business of Sun Pharma, which could give it some cushion.
All right, Ekta, thanks very much for that. Well, let's get back to banking. Yes, bank reported numbers as well. Abhishek is with us with that detail. Abhishek.
Well, Prashant, to begin with, it's surprising that their asset quality actually deteriorated a bit on a sequential basis, despite the fact that they have sold all their bad loans to ARC. So gross NPA ratio has increased by 15 basis points on a sequential basis. Both the deposits and advances growth are below the industry benchmarks. So they have lost market share in advances, both YOY and quarter on quarter. However, the net interest margin is at 9-quarter high of 2.8%. They continue to remain remain weak, especially on the operating efficiency, as their cost-to-income ratio is at 72.1% when compared to 70.7% in the previous quarter. So in terms of our poll, the NI is ahead of our poll. However, elevated provisions have ensured that their PAT is below our poll. Back to you.
All right, thanks a lot for that. We will, in fact, be joined by the management of Yes Bank later on the show, so do stay tuned in for that. Prashant Kumar, the MD and CEO, will be with us. But let's get back to tracking numbers now. Macrotech developers came out with their Q4 numbers. Let's find out how it looked in the context of this big boom that the realty space is seeing. Sonal, how were the numbers this time?
Well, they were good. We did get the operational update last week itself, and it was a good set that the company reported. Now they've given guidance for FY24, and it is looking good. They're expecting pre-sales of 14,500 crore rupees, which is a 20% increase versus FY23, where they reported 12,064 crore rupees of pre-sales. Expect operating cash flows also to jump up to 6,000 crore rupees. And if you look at net debt, they say that they expect continued reduction and also aiming for ceiling of below 1 times net debt. That would make it below 6,000 crore rupees in terms of net debt for the year to come. They also saw 8% pricing growth in FY23. The company says that they have a policy now to distribute 15 to 20% of their profits as dividend, which of course the shareholders will like. They announced ₹2 per share as dividend this time around. Also a bonus of 1:1, so the street could take some heart from that. In terms of the UK investments, they repatriated 550 crore rupees in FY23. They expect additional 550 crore rupees in FY24 as well. So the cash flow situation is looking good as well, and they have strong targets for FY24. Expect the stock to be in the green.
All right, thanks a lot for that, Sonal. Remember, we'll be interacting with the management of Macrotech developers later on the show as well. Well, let's wind these stocks that we're looking at with Rima. She's joining us to tell us some more stocks that are in the news. Morning, Rima.
Hi, good morning. So Wipro is a stock I'm watching today because the company will be considering a buyback along with its numbers on Thursday. That's the 27th of April. This will be the company's 5th buyback. Last year, the company did not do a buyback because they were focusing more on their M&A. There were cash payouts associated with their acquisition, but now they will be doing a buyback. According to JP Morgan, the size of the buyback could be $1.25 to $1.5 billion. Motilal Oswal says the buyback size could be closer to $9.5 billion, so a little more than $1 billion. Morgan Stanley says based on the past buybacks, the size could vary from 6,500 going up to 10,500 crores. Cash in the books is ample at $2.7 billion. The past 3 buybacks have been tender buybacks. This is something we can expect this time too, and promoters always participate in the buybacks. The good part about a buyback is it tends to provide some price support. Now, IT companies are going through a bit of a troubled time given the uncertain environment. So even if the numbers are disappointing, at least there is that buyback support. MapMy India is the other stock that I'm tracking. It's an okay set of numbers. No big positive surprise. It's not a bad set of numbers. Revenue growth of 27%. Profits too have jumped up on a year-on-year basis. Back to you.
Right, Rima, thanks very much for that. So those are a few more earnings which are coming through. But let's focus on our energies in the commodities space now. Manisha is joining in with... Okay, I think we'll get to Manisha in just a bit. Let's get you a quick recap of our list of top 10 stocks. Stocks with positive news flow are Reliance Industries, ICICI Bank, HDFC Life, Macrotech Developers, Wipro and MapMy India. Stocks with negative news flow are Sun Pharma and Yes Bank. Okay. Now let's get to Manisha for a quick roundup of all the action in the commodity space. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'll start with the crude oil prices, where we are trading at a 5-week lows right now. We've seen 5% of a decline in the previous week. And this is for the first time in 4 weeks that U.S. has added gas and oil rigs, and that seems to be weighing on. Also, the markets are waiting for the first quarter GDP numbers from the U.S. this week, and that will give us further direction. But the concerns about the demand growth in the global market seems to be weighing onto the metal prices also. So you have steel now trading at a 4-month lows, and we've seen prices decline by 3% in the previous week. Copper prices fell 2% previous week, and we've started this week 0.5% on the weaker side as well. There has been a 19% decline in imports in China in the month of March, and the premiums have continued to decline. The inventory and Shanghai have been increasing. So some bit of a red across the street when you look at commodity prices here, especially metals, most of them trading in the negative right now.
Okay, Manisha, thanks a lot for that. So steel prices at a 4-month low. Let's slip into a quick break. When we come back, we will be joined by market expert Prakash Diwan to talk about a whole host of stocks and the markets. We'll also be joined by Harshvardhan Dole and Balaji Subramanian to discuss more on Reliance's Q4 results. Welcome back. The stock of the moment, the stock of the day could be ICICI Bank. Very strong set of fourth quarter numbers aided by a strong net interest margin and high operating profit. In fact, it was an all-time high net interest margin at 4.9% and record quarterly profits as well. We caught up with the bank's MD and CEO Sandeep Bakshi on the stupendous performance and, of course, his track record, which has been, impeccable so far. Listen in to what he had to say.
Including non-fund-based outstanding, the retail portfolio was 45.7% of the total portfolio. The business banking portfolio grew by 34.9% year-on-year and 7.8% sequentially. The SME portfolio grew by 19.2% year-on-year and 6.2% sequentially. The growth in SME and business banking portfolios was driven by leveraging our branch network and digital offerings such as InstaBiz and Merchant Stack. The domestic loan portfolio grew by 20.5% year-on-year and 5% sequentially. The overall loan portfolio grew by 18.7% year-on-year and 4.7% sequentially. Looking ahead, we see many opportunities to drive growth in the risk-calibrated core operating profits. We believe our focus on Customer 360, extensive franchise and synergy and collaboration within the organization, backed by our digital offerings and process improvement and service delivery initiatives, will enable us to deliver customized solutions to customers in a seamless manner and grow market share across key segments. We will continue to make investments in technology, people, distribution, and building our brand.
Okay, there is very little to complain about this quarter's numbers. So let's get Prakash Diwan on board. Prakash, post these earnings, do you see this as, some sort of a steady compounding story? I ask because there's nothing to fault in these numbers, and also the stock has not done much this year. So do you think there's a scope for a big upside maybe over the next 12 to 18 months?
Good morning, Sonia. So definitely, as compared to the 8% fall that we've seen in the stock, while these numbers continue to kind of stack up so brilliantly, there is always this catch-up that could happen. But remember, you also have to take it that this 5% names is something which may not be sustainable, as very clearly indicated by the management. So, but given the kind of scale that they have touched upon and the kind of processes that have started delivering, this is not something which is a one-off. There's nothing in the quarter that was one-off. So absolutely secular in terms of trend, and which means that if you could do this for 4 more quarters, why not? So my sense is there will be a lot of appetite for the stock, but it's been a consensus play in terms of the best private sector bank to go with. So while Kotak and Axis had their own share of issues and struggles, which means that the under ownership level that you would actually need for ICICI Bank to move up very rapidly is still missing. I mean, people have it in their portfolio to a significant extent, Sonia. So, and it's not available cheap, right? So there will be a growth, but it will be gradual. There will be a growth in the stock price, which will be gradual. There will be appetite that will build as allocations keep on having to improve as percentages of overall AUM. But as you said, no fault finding here. There's absolutely nothing to complain. But then, it's also well discovered from that side. So I'm not expecting a very rapid climb all the way to 1100, 1200 or whatever levels that some of the brokerages have come up with. But yes, it definitely has the potential to do that. But give it time. Give it time. Don't expect fireworks on day one.
All right. Hi, Prakash. Good morning. Prakash, let's talk about the HDFC Group. You had, RBI commentary that came out on Friday. And it'll be positive. It's a step in the right direction for the merger. But I want to focus on HDFC Life. Yes, there are challenges to the business and post, what we've heard in the budget. There's a very, very negative sentiment for the stock on the whole. Even after the positive update that we got, the stock corrected 5% from the top on Friday. But now the overhang with regard to that 49% stake, it will not come down to 30%. There's an option for the HDFC Group to go ahead and increase stake to around 50%. What's your view on the stock at current reckoning?
So, Nigel, that's a very fair point that you bring this out. So while the HDFC Bank and HDFC Limited merger has been given a lot of relief, if not all of those areas, but especially on the PSL, which we'll talk separately. I think the HDFC Life, HDFC Ergo waiver of sorts to own 50% is a big positive. It's a big positive for both these companies, for these subsidiaries, because there's this overhang that they would have to get out while the business is doing well. And if you look at the recent numbers on the VNB side, I think organically HDFC Life tends to be in a far more stronger footing than it has ever been in the last many years, given the product mix that they have been focusing on. So when that growth happens, and if the parent does not have to dilute and somebody doesn't have to buy it because it's available at a distress or a compulsion of sorts, it's definitely going to be a positive. My sense is we'll probably start seeing it being the top performer in the life insurance pack for sure, given this removal of this overhang. But you also have to look at there's so much happening. Result season is on. There could be people who would probably want to do it only when the merger starts gets closer to being effective, and not necessarily right now. But I don't see any further losses or disappointment on HDFC Life from here on, given this particular factor which was impacting sentiment. I think.
Okay, Prakash, stay with us. We're just coming back to you, but we've got two analysts joining in on Reliance Industries as well, which delivered a very strong fourth quarter showing. All-round beat on estimates. Strong show from the oil to chemicals business has driven a record quarterly profit, while margins have expanded as well. Harshvardhan Dole is Vice President Institutional Sales at Institutional Equities at IIFL, and Balaji Subramanian is Vice President at IIFL Securities. Gentlemen, great to have both of you here. Thank you very much for your time. Harshvardhan, if I can start with you, because the beat came from the sector that you have under your coverage, oil and gas. Sort of explain to us in context, how should we look at the numbers and the beat that we've seen, and what does it mean for the stock from here as well? Go on.
So the beat in the O2C came, in my opinion, on account of three things. One, there was higher production. Secondly, the benefits of fuel sourcing, which is both on petrochemical as well as on the refinery side, seem to have come through. And third, most importantly, is basically the operating efficiency. I'd also like to supplement that while globally the demand growth was a bit of an issue, domestically, all the three segments, which is polyester, polyester intermediaries, as well as polymers, saw a healthy demand growth in fourth quarter. And Reliance is favorably placed when it comes to the domestic market. So all these issues essentially led to a favorable performance on the oil to chemical segment. On the E&P, clearly the company seems to be benefiting out of a ramp up in the gas production. And at the same time, the realizations that they have got have been in sync with the global trends. So it's a benefit of volume ramp up as well as price being, favorable. These two combinations have led to almost, 60% growth, incremental EBITDA being contributed from the old economy businesses.
Okay. Let's talk about the new businesses as well. Balaji Subramaniam, Vice President at IIFL Securities, joins in to tell us how he looked at the Jio business. Balaji, thanks a lot for being with us. So, for Jio, things were largely in line with estimates, no positive or negative surprise. But I think what stood out is the fact that there is this absence of a prepaid tariff hike, and that has actually slowed down the revenue growth on a year-on-year basis. How do you see the business shape up now over the next couple of quarters?
Good morning. Thanks for having me on the show. So as far as Reliance Jio is concerned, the performance was in line with estimates. It was quite steady. One thing which surprised a little bit on the positive side was that the revenue growth, if you take out the factor that this quarter had 2 fewer days, the QOQ revenue growth was almost 4%. So I would say these are pretty decent numbers. And what I think is happening is that in addition to the steady traction that they are seeing in the mobile business, businesses like fixed line, FTTH, and even enterprise for that matter, they have all started contributing a little bit. And that is what probably drove this fairly healthy performance. As far as 4G prepaid tariff hikes are concerned, my own sense is that probably, we are not going to see it in the next few months or so, because firstly, there is some weakness in the spending environment. And the other thing is that probably as we get closer to the end of this calendar year, we will be approaching closer to the elections. And I think in such circumstances, probably the earnings, the tariff hike that we have been waiting for might probably not play out this year. So in the interim, I think what will continue to drive revenue will be the steady subscriber additions, as well as the fact that some increase in data consumption can continue happening, because as the group gets into more and more, sporting events like what we are seeing in the IPL this quarter, or the Women's Premier League in the previous quarter, or FIFA World Cup before that, I think all of that will drive some data growth, and that will result in people upgrading to higher allowance packs.
Hi Balaji, good morning. Since we're talking about Jio, I just want to understand whether you're seeing it as a positive read-through for the telecom space on the whole, that the ARPU is held on a quarter-to-quarter basis. Some brokerages are suggesting that. So I ask you, is there any read-through for the telecom space?
See, my own read-through would be that the revenue growth being a little bit better sequentially, I think that should benefit Bharti as well. And Bharti also will have this extra tailwind where they did the tariff hike in the entry-level 2G plans, 2G prepaid plans. So as far as whatever data we have come through so far, that doesn't suggest that there is going to be a material churn on the subscriber front. So the subscriber churn will be manageable for Bharti, I believe, and we'll also have some increase in terms of the ARPU just because of that factor. So net, I think Bharti should also have a reasonably good quarter, but I won't expect it to be a blockbuster quarter, since anyways, as I said, the quarter has 2 fewer days, and there is no real 4G prepaid tariff hike tailwinds that will come through.
I think not too many people are talking about it, but the retail business has grown at a scorching pace this time around. Harshvardhan, I wanted your thoughts on it. Over 18,000 stores now is what they have. And, I think this time around the retail growth has been faster than what we've seen in the preceding 3 or 4 quarters. How much do you think that can add to the overall SOTP for Reliance, the fact that consumer businesses are growing at a very strong pace?
So the pace of, store addition continues to surprise us. We thought that the store as well as the capacity addition will sort of slow down in fourth quarter, but to a surprise that has continued. And it appears that the 100 million square feet mark is, maybe achieved in the next couple of years' time, which was, seemingly quite distant. So if that continues, I think a 25% growth in sales as well as EBITDA is something which is a base case scenario for the retail business. I think if that were to happen, then a base case valuation of close to 100 to 110 billion dollars in terms of EV, that seems to be the base case for Reliance Retail from here on. And any move to delever the balance sheet out there, or induct a strategic investor, or do an InvIT which is being talked about, is another trigger which probably will lead to re-rating of our valuation in that case.
Okay, all right. Gentlemen, we'll leave it there. Thank you very much for your time, both of you, and appreciate you running us through that. Balaji and Harshvardhan, it's a pleasure. Prakash is with us. Prakash, stay with us. We're just coming back. Want to get your thoughts on HDFC Bank as well when we return on the other side. Let's take a quick break. Sudarshan Sukhani and Mitesh Thakkar will also join in for some technical trading ideas. Okay, welcome back. The SGX Nifty futures are indicating a 58-60 point higher start, 17,698. Let's get Anuj into the conversation. He's here with us in the studios to run us through what he's making of the setup. Very, very quiet week, Anuj, last one.
Yes.
So with Reliance and ICICI in the bag, maybe, some upsides.
Yes. Morning, Prashant. Morning, Sonia and Nigel. In fact, what, I'm calling it a possibility of a blockbuster Monday, because, if you can't have a breakout today, then you can kiss it goodbye. Spectacular numbers from ICICI Bank, no other way to put it. And stock has shot. If you see the last 3 or 4 days, Reliance numbers, of course, also beat on all parameters. Also prove this adage, old is gold, right? O2C business really delivering. And that stock has also not been, last 1 month it's done well, but over a 3-month period not been too great. I think the other important news is what happened really on Friday, the big relief which came in for the HDFC group of stocks, especially HDFC Life. My sense is HDFC Life could be today's stock of the day, actually. And of course, there's buyback announcement from Wipro. So across all sectors, you have positive news, start of expiry week. So as I said, if today also you don't break out, then it's negative. I think on the Nifty, what's interesting is all through last week, Nifty has been defending the 200-day moving average. It's been breaking that intraday. Current 200-day moving average is 17,605. It's been breaking that intraday, but defending it on a closing basis. This week's most crucial level, 17,750 to 17,850. If you cross 17,850, you see massive short covering. 17,700 call has huge open interest, 1.68 crore shares. As I said, we need to see the reaction to Reliance and ICICI Bank's numbers today. On the Bank Nifty, it's been one shade stronger than the Nifty, and ICICI Bank should support it, along with HDFC Bank. 42,000 put and 42,500 call have the highest open interest. My sense is, and I made this point last week as well, you can test new all-time high in May, provided you hold 41,500. It's gone through 1 week consolidation. If you cross 42,700, I think you're in for massive short covering again.
Okay, so exciting times perhaps. It's been, in a slumber for way too long, right? And hopefully these triggers will get the market going. But let's pose these questions to Mitesh Thakkar and Sudarshan Sukhani. Gentlemen, morning to both of you. Sudarshan, do you think this is the day when the market breaks out of that range? I mean, day or week, whatever. Do you think that, the market has enough in its arsenal to do that?
Good morning, Sonia. I think we are in an uptrending market and we are heading higher. I can't say whether we'll do that today or this week, but the trade is to be on the long side of the market. See, Sonia, we had a 1,000-point rally, almost non-stop. After that rally, it's reasonable to assume that the markets will pause, consolidate, even dip a little, which is what they are doing. So this is not a change in the trend. It's just a consolidation after a sustained up move that we saw. This will eventually lead to another round, another leg of the up move. The difference likely is that we saw a straight line rally last time. This time markets alternate. So maybe we'll see a choppy advance, but markets will go up. So be on the long side of the market for today. Keep a stop under 17,550 and then let the market take over.
All right, fair enough. Mitesh, morning. What about you? How are you approaching things now?
Morning, Prashant. We've been having a very similar kind of an outlook that this is basically nothing but a sideways activity when the markets, will consolidate and the moving averages on the daily and the weekly chart will start catching up. I think that's happening. What is good is that despite the entire choppy last few days, the entire last week, in fact, the markets did not break the 200 average, which was the lower end of the range, which is around 17,550, 570 levels. I think it's moved up towards 17,575. But broadly, that level is held. And every time the market has gone there, the dip has been bought into. So I think that scenario remains. My sense is that another 1 or 2 more days of consolidation, and then you should start looking at possibility of a breakout on the upside. And 17,550 by default becomes the pivot, so you can keep the stop 10 points below.
Okay, all right, Mitesh, got the view on the index, but what about individual stocks? What are you looking at?
Yeah. So on the stock side, Nigel, I have 3 buys and a sell. On the buying side, a couple of crude-related items. Asian Paints is a buy with a stop at 28.55 for targets of 29.40, and Pidilite is a buy. Keep the stop at 24.15. Look for targets of around 2,500. AU Bank, after a big breakout, had a pullback for last few days. Now can be bought with a stop at 6.54 for targets of 6.90 to begin with. And India Cement is the only sell call with a stop at 180.5 for targets of around 170.
All right. And Sudarshan, how about you? What are the stock ideas for the day?
I also have a paint company. It's Bazaar Paints, luckily different. Bazaar Paints is a buy with a stop under 570. It's consolidating, and that consolidation should lead to a breakout. Sonia, one thing, you've been in the market for so long, just because we have a buying idea and the trader buys doesn't mean it has to go up in the next 10 minutes. You have to have a lot of patience, but these things work out if you have patience. So that was just a little speech.
Absolutely.
Cipla is a buy. All right. Cipla is a buying opportunity. It's making a fairly bullish cup and saucer pattern or head and shoulder or rounding bottom, whatever you call it. Again, a lot of patience, but it should give you good rewards. GNFC is an intraday short. The stock has been falling for the last 6 days. I don't know why. So it's an intraday short with a stop over 532. And finally, Lupin, which came in my list earlier also last week, very large, narrow trading range has broken out. You have to take a position and stay there. be long with a stop under 680.
Okay, thanks a lot for that. Absolutely. I mean, these are not recommendations that work by the hour or by the day, right? These are trends that you're talking about, and the trend is definitely on the upside. So just got to have a little patience, perhaps. Let's slip into a short break. On the other side, we'll be back with the pre-opening rates. We'll also speak with Ashutosh Mishra of Ashika Stockbroking to discuss about the big relief for the HDFC Twins and HDFC Life, as RBI has now given an approval for HDFC Bank to increase stake in HDFC Life and Argo. Stay tuned for more.